Monday, December 16th, market analysis. Stan Ehrlich, good morning. 10 o'clock sharp, California time. E-mini, I always start out with stock market indexes and get into futures markets. And we have some brand new signals today, as well as some from last Thursdays that are doing very well. Precious metals, copper, we'll go to those in a minute. Now, E-mini is strong today, up 3 points or 31.50, 3 points on the spider translation, but not a new high for the move, not overbought. And this is still acceptable if you believe that the market did top out around December 6th. So far, the high day, overbought, but not quite at the top of this upward slanting wedge or channel. They're both very similar, close cousins. This is really a wedge. So I need to have this fail somewhere here, right around this ballpark, maybe a little bit higher, but do not make a new high for the whole trend if this is going to be the high day, which was December 6th, and also to make lows lower than last week's lows, which are almost exactly the same on Tuesday and Friday, I guess it was. So let's see a turnaround. Otherwise, if you are long currently, I wouldn't get out. I would just raise my stop, possibly under last week's lows, or maybe even a little tighter. But warning, we do have some signs that it could have started to roll over, just not getting the follow through I was expecting. 5-minute chart shows you we're right up against the rally highs for a few different days in the last week and a half. Danger zone, so to speak. What about the SPY? The same thing. We're up very close to previous highs. I need it to basically stop about here and turn down. If we had a bearish engulfing today, which we don't at this point, we would be getting below Friday's lows, and then we would have an official sell signal because it would be overbought within the allotted look back time, and we'd have that bearish engulfing. But we don't. It's not starting to go down yet. It trend down yet. So I'm only warning. Next, spider 5-minute again, right up against where it's stalled out before. So careful here. Next, QQQ, total new high ground. It might have even gapped up. I'm not sure. Nope, there's a slight overlap. So no gap, but overbought again. And we are moving out of this wedge completely today. All of the price range so far is above the wedge. So that, frankly, looks very bullish unless we get a reversal. Now, overbought does bother me for the moment, but because we're overbought, we might only pull back to the top of the wedge or around the lows of Friday or a little bit higher. Lower than that gets back into the pattern after being overbought and can get pretty dangerous pretty quickly. But frankly, if it hangs in here, no serious dips down, makes new highs this week a couple of times, wow, this could really be something very, 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 very strong, like a blow-off top coming, which means it would go a chunk higher, but very, very fast, and then finally turn. Next, 5-minute QQQ, still up there, still strong, still looking good. NASDAQ, NQ, same thing, of course. New high ground above the wedge now for several days, and essentially doing what I just talked about a moment ago for the QQQ. This is the NQ. It's just doing it a little quicker. I could move this long. Oh, you know something? I'm sorry. We changed contract months. By the way, we're using the Marches. So I have to make adjustments to my drawing objects, and the one that was important was the one I just moved up. So same as the Qs, QQQ. Next, 5-minute chart, just screaming higher. This is not maintainable, so to speak. Be careful. YM, little lower on the day. I can't believe this is doing the exact opposite that the other indexes we just looked at are doing. They're going pretty much straight up, very strong. And this has had a lower high, a lower low, and a lower close for 1, 2, 3, 4, 5, 6, 7, maybe an unheard of 8 days in a row. Sorry. So almost oversold when the others are overbought. I can't remember the last time this happened. I just can't. I'm trying to think. No, it must be years, many, when the YM Dow indexes are almost oversold and the high tech or a spider is overbought or almost overbought. Just a very, very unusual. Now, the 5-minute on the YM is almost making new lows as we speak. Let's go to the Russell. Now, the Russell is bouncing back pretty good today, and it was almost oversold on Friday. So a little bounce here is just fine, but I do think it's got more on the downside, probably to the support area of 2310. Maybe you need to pay close attention to this bull trend line because it's higher than 2310, and it might stop the decline, and we might even get oversold as well. So I'm still basically looking for lower levels, but most of the break I think is over. So a little bit left. Next, you just got the 5-minute Russell. Let's go to bonds, which are down very slightly on the day, 3 or 4 ticks. Have made a minor new low, but now the second day of being oversold and very close to previous lows here. So I do think that's why the question mark here. I do think it's getting ready to turn back up, and we may be finishing this last shoulder low, which I thought was finished before. This is just adding on to it if it holds and if it doesn't go down to the line again, which for the single shoulder, head and shoulder bottom, that being the last shoulder, and this is not a shoulder, that would be okay. So sometime very soon and just around these prices, I'm looking for it to turn up. And same thing for the 10-year notes. And it's not quite as close to previous lows in the last month or so as the bonds are. Next, crude, still between a rock and a hard spot. And I'm looking for a breakout of some sort or an overbought or oversold situation to help me decide the market's turning. Got nothing at the moment. Looks like it could work its way a little bit higher. Natural heating oil up against resistance, exactly the same as Friday, stalling out at the moment. I would not be surprised to see it turn back down because of the resistance area, but we're not overbought. So maybe it'll pop up a little bit more to 2.31 something. So modestly friendly, but very cautious. It could stop rallying right here and turn down. If it breaks into new low ground, we're just going south big time. And that's the longer term opinion. Natural gas gapped down a little bit this morning. We're not overbought or oversold, neutral territory. It could be building this head and shoulder bottom. Sorry, there are a lot of these around lately, not necessarily all the time. Just because it's my favorite pattern doesn't mean I go out of my way to try to pick them. They're just blatantly there or almost there. And that's when I begin to talk about them. So one last shoulder maybe in a couple of weeks, so a little bit lower for a week or two, and then north if the pattern is going to pan out the way I'm thinking it could. And that's the neckline, and that would be the approximate upside objective, 4.8. Pretty good bottom formation so far, maybe, and still developing. Next. Oh, yeah, and we did get sell signals smack on top of the rally on the high day, October 4th, and smack on top of the rally here, also November 22nd. Now, do we have a head and shoulder top in gold? We've gone down from Thursday's bearish engulfing on Friday and again today. Now, if we start closing around 26.26 or lower, that's going to be extremely interesting because the neckline, which is very downward slanted, could begin to look within reach. Then we would make a new low for the pattern and finally get to the neckline, and all that is going to add up to or subtract down to, if you want to look at it that way, 2276. So this is quite bearish if this pattern pans out correctly. You do kind of have a double in here. We had a modestly profitable trade on that sell signal. That was a little bit of a loss. This sell signal was actually not a good one at the end of the day. So we call it a failure signal. But during the day, it was legitimate until it rallied late and closed without a lower close. So on the close, no outside down day. It was an outside up. But for a while, it was an outside down. That's why the ER1 scalp and overnight got into the trades, but they bailed out by the close because the signal wasn't good on the close. So these are very small little losses. Now, the bigger one, keep your eyes open. Watch out. This could develop into something pretty bearish. Silver, we did get on Thursday a sell signal, ER signal, red, classic, beautiful on the high day, went down a chunk on Friday, is around unchanged at the moment. Doji inside, nothing going on. Our stop is locking in a really nice profit that quickly. If you wish at this point, because you're not stopped out, you could raise the stop some, thinking maybe it's a longer term position you want to keep, or you could lower the stop a little bit if you wanted. This is our default input kicker numbers, and the kicker number is the speed at which the yellow trailing stop moves. The green line is simply connecting the entry price to our current tick or offset. Okay, got the top. But bearish pattern in silver, neckline nowhere near as downward slanted as gold, but still quite bearish. Minimum downside objective should be 24 3/4 ish. And we're getting closer to a breakout. Next. Oh, yeah, the shoulder's a little lopsided. I thought it was going to be in here when these two highs occurred, when it came real close to the neckline. It extended the shoulder with a higher level, which is a better price, right around where it topped out before for the shoulder. So the prices are more accurate, but the timing was further out than one would normally expect. Nevertheless, pattern's still there. Still okay, not textbook. Next, sell signal on the top of the market to the exact day on platinum. Platinum is extremely close to its head and shoulder top neckline with a minimum downside objective of 790. It would appear that if it's going to make it, platinum's going to break out to the downside first and gold third, silver in the middle. But looky, we have a bullish engulfing today, just above the neckline. That's not what I wanted to find. This is a bullish pattern, head and shoulder or no head and shoulder. It implies the market's going to rally a little bit, which is okay if it doesn't go up too much. And I'm thinking, 966 might be about it. Maybe a little bit below that would be better, but lower the better. Simple as that. Now I'm looking for no new high above 966. And I'm looking for a failure and for the downside breakout to occur in the next couple of weeks. So there's your precious metals. But copper, hey, sell signal on Thursday at the top of the rally, perfect. Dropped off sharply on Friday, a little bit lower again today. We don't really have a head and shoulder top here. We got more or less a head and shoulder looking, but it's not a high because it's not the top of a bull market. They don't normally develop after in a sideways movement after a down move. It kind of looks like one though, in which case you can say that the neckline is almost flat. I'm not going to talk about that. All I need to do is get more downside from my sell signal, break below 4.04, and wow, we've got a big move coming to the downside, probably, in my opinion. Okay, soybeans, getting closer to our major bearish breakout. If we can close below 977, we are still short and just barely hung on to our short from a sell signal back on November 14th. Looking for break break of support, looking for lower levels, bearish basically. Soybean oil dropped off the new lows for a week, topped out in resistance, didn't even need to be overbought. Long-term trend is down in soybean oil, looking for a break of support. A pattern, a bottom pattern could form if we do hold at support and start to move its way back up above, I'll say above 44. But I don't expect that at this point. I think we're not going to hold and everything is going to break down. Next is soybean meal. And I'm looking for soybean meal to break the support level. We just barely tried to do it this morning and on Friday, but support is holding fairly well, not oversold. So let's see here in the next few days if we get a bounce or not. It's a good place to do it from, but I haven't got all the tools I'd like to have, like oversold, in place to be more convinced of that. So basically, I'm bearish, but a small bounce could happen first. We're looking at corn. Bottom formation breakout, false breakout last week, Wednesday, Thursday, Tuesday, Wednesday, sorry. Thursday got back below its neckline. Friday stayed there. Today is coming up a little bit more. I don't know. I don't like the Thursday and Friday movement because of it dropping below the neckline. That does not happen. Maybe 10% of the time or less, and the pattern's still good. But normally this kills the pattern. So I'm going to wait to see how it acts in the next few days. Head and shoulder bottom could maybe be viable, workable. But again, I don't like the fact that it did something wrong on Thursday and Friday. So I'm going to wait. I think support's going to get broken. I think it's going to head down substantially to new lows for years this week. But it is a good place to bounce off of, but I don't see it going anywhere. Next, brand new, today, now, bearish sell signal in cattle. We got overbought last week. We had a bit of an upside breakout above the resistance levels. We have new highs for the whole move, but this is a failure to stay above support. And in overbought conditions, a major bearish engulfing ER sell signal. All I have to do is stay where we are or even lower, but basically below the close of Friday, and I've got myself a major sell signal. Let's hope it works. ER1 is about break even at the moment because we're short just under the low of Friday. Maybe a couple of tick profit. New bearish engulfing ER sell signal today in cattle. Downside, first objective would be 185-ish, 184 and a half area, and then stair-stepping its way down to different support levels and trend lines. We'll see what happens. I'm bearish in cattle. Miss Piggy has an outside down day, not overbought, but that signals it'll probably dive into this support range, which it's bouncing off of, looking for lower levels in hogs. And we go to the only stock I'm following these days for the last, 3 weeks or so. A little bit more of a dip would be fine. Something in the area of 90, maybe even down to maybe the low 80s, and then higher. We've built, in my opinion, past tense, a 2-year bottom, very large, fairly complex, lots of goodies in this bottom formation that I like about it. So I'm bullish to the tune minimum 134-ish, and look where it's been before, up in the 280s. So it could go way up above my minimum objective. Back to the E-mini, still hanging in there, up about 3.5 or 3.4. The 5-minute chart, no signs really of it topping out. You guys have a great day and profitable trading to you.